Hey guys, we're here with Ian. We brought Ian back to chat through futures markets, commodities, bonds, currencies, you name it. Hey, how you doing, Ian?
Hey, good to see you, Jason. Good morning.
Great to have you back on, man. Just chatting about markets. It's always good to talk to you and just get a feel for what you're looking at, what you're seeing. We were just off camera talking about bonds, and I said, let's turn this on. So, what are you seeing in the bond market right now, Ian, and what is everybody else seeing?
Bonds are breaking down. Got a lot of sell signals. I wasn't crazy about this trade. We've been talking about how, the signals are there. You've been short the two.
Mhm.
Maybe there's not a whole lot of,
I'm short the 10 now too. I mean,
yeah, the 10, even the 30.
yeah,
I think you'd be
30's
short
a
the
short.
30.
They're all short now.
Yeah. Um, Looks like rates are going to continue to rise. We'll see, how that plays out and towards the end of the year. But yeah, they're all shorts. And maybe the downside is limited, but we'll see. We'll
Yeah,
see.
so to me, when I'm looking at something, so I think the thing that people, have who have followed me for a while, they've seen like, especially I started really talking publicly around 2016, bonds were really choppy around then, and then getting into 18 a little bit more. And people who followed me for a while, you guys know I've done pretty well in the bond market. I've called it pretty clearly most of the time. I'm never catching a top, never catching a bottom, but the big trends of them I'm usually catching pretty well. So when we're looking at the bond market, there was a big trade in 2018. It bottomed out. Commercials were at extremes. Let me go back here, look at 2018 on my COT data too. And then we saw commercials at extremes in 2018. Boom. Now we got the bond trade starts heading the other direction. Basically at that point, the Fed was raising rates. And until Powell said in December, I think it was December 26, 2018, the rates really didn't go anywhere. They just chopped around. They went lower during 2018, and then he said, "Finally, we're at neutral." He said before that, I think it was 5 days before that, he said we're a long way from neutral, and that's where you see the crash in the S&P 500. And then he comes in on December 26th and says, we're neutral now. We've done enough," and they stop raising rates. And then the market starts going up again. The bond market starts to trend for, basically up until 2020. I really didn't get any sell signals up until 2020. Starts to break down in the latter half of 2020. And then we start to head the other direction. Then it's a short. And now it gave a whipsaw signal after October coming into this year. It gave a whipsaw, buy them, and then it went right back to the downside. So sometimes you're going to have that. You're going to have whipsaw signals. Now what we're seeing is a lot of people fight the last battle a lot. This is what we were talking about off camera. People fight the last battle. They go after 2008, every single crash anybody was looking for was about the banks. We've got to short the banks. We've got to short the banks. Why do we got to continue to short the banks? I thought they were, a little bit healthier now. Well, last time what happened to banks? And then it was real estate. Every single time anything happens in the economy, everybody's going, well, real estate's going to blow up.
Yeah.
And I think with the bond market, with the way inflation is, like, the thing about the bond market, it really hasn't had to handle major inflation for years, like for 15, 20 years even. Major inflation hasn't really happened in the market until 2020. 2008 would be the last time we saw any of it. So now the bond market's starting to handle that, and it doesn't look pretty. And if you look at rates back then, they look much different than they do today. And if we look at the commercial buying, like commercials, they tend to put in bottoms sometimes in the bond market, but also there's another end of that where sometimes the commercial buying gets to huge extremes and it doesn't put in bottoms. For example, 2020,
Yeah.
commercial buying was at the top. Like commercial buying was crazy, and right at the top, that's when the commercials started to actually sell, which is different than you would ever think. That's much different, and you would have thought maybe bonds have higher to go. The world's in a bad place. So the same people that are kind of saying, "Oh yeah, bonds have got to go up here," they're the same ones that said, in 2021, where there was that bottom and a little bit of rally, bonds got to go up here too. And then you got to also say, in 2022, bonds got to go up there because, it hit support. So I guess it's got to go up again. And then in October this year, it gives a whipsaw signal. And even though it's going down right now, you say bonds got to go up again. That doesn't mean bonds have to go down. That just means if you're just looking at it simply from like a way to make money, you made a lot more money going down than up. That's all, and that's simple. And I know we all have gut instincts, and I know, but you have to understand, our instincts get us in trouble most of the time.
Most of the time, yeah.
It feels very good when your instincts work and you get to go, wow, my gut feel was right on point. We killed it with that trade. I nailed the bottom, and it feels really good. And not to mention when you're banging your chest and you're out there, I was just talking about this with Mayhem the other night. When you're banging your chest and you're telling everybody that you've got this bottom and you bought this, like bought TLT at this, bought the 30-year bond at this, bought this at this price, you're going to feel really cool when it goes up. However, that's just your ego. Your ego wants to tell you that you've nailed this bottom, because really the money isn't going to be made right here. Bottoms are choppy and they're fucking messy. Like they're really hard to trade. It's not going to be a smooth trend down here. The real thing where you're going to make money, and nobody's going to want to hear this, is if you're looking at TLT, it's over 110, 111, and that's really far from here for some people to think about, but really like that's when the trend's going to happen. That's when you're really looking at it. Down here, it's going to bounce. We're at support. Like, of course it's going to bounce. It's going to make some noise. It's going to roll around, but it could just as likely bounce here up to 98 and then go right back down. I've loved your conviction on this idea, and it isn't because your conviction is based on anything else but just looking at the chart and going, yep, that's a downtrend. That's
pretty much
perfect conviction.
Yeah, and to kind of go back to just like reversal, talking about how reversal formations are messy. I much rather trade a continuation pattern.
Yes.
Any day of the week than a reversal. And when I look at the T-bonds, 30-year T-bonds, I see a major, maybe you can call it a head and shoulders top, that broke down, that completed in early 2022. And has been trending lower since. And over the past, I don't know, let's just say since October of last year, or since last fall, we've been consolidating within an ongoing downtrend. So yeah, I like actually getting short. I like taking these short trades, even though it's hard to it's hard to imagine that yields are going to continue to rise to an extent where this bond trade is really going to continue to trend lower.
Yeah, I mean, for me, I could see it where it's not the fact that I can't see it working the other way. Like it's not but I think for me, like you got to understand what happened during those times in 2018 what's different today. In 2018, if Powell comes out and says finally we're good, we're not going to be raising rates anymore, I would say that'd be a great sign. And honestly, there is a sign here, considering we've gone higher in rates and we haven't made a new low in some of the longer term bonds. Like that's a good sign. That says that there's a possibility of bonds trending up here. But once again, it's just the trend, like that's definitely lower highs over and over again. If you give the chart to a 2-year-old, they could just point to lower highs and say that's it. Like it, and it's as simple as that sometimes. And it's just like catching bottom sounds really fun. And it sounds cool, but when we're really trading or really putting on that next move, we don't want to just catch a bottom. We want to catch the meat in the middle of the trade. And catching the meat in the middle of a trade does not mean catching a bottom. It just means You know, in 20, for example, the 2018 trade, if I look at, let me look at when I was entered that trade, just so I can give an exact date. December 3rd. So on December 3rd, that's when I got long. You know, that wasn't the bottom. That wasn't anywhere near the bottom. That's when it started to move up, was December 3rd. Now, thinking about that, that's the bond market sniffing out that Powell was going to stop then. Also, that looked like that was a possibility, you know, when the market was trending up after October in bond
Yeah.
market. It is not trending up now, you know, like it is just not trending up today. And that's okay. Like there's nothing wrong with that, but it is not trending up today. So you don't have to think much about it. Like back then it was, if I think correctly, I have a chart here so I could bring it up without speculating, but I think it was October, like late October when it really bottomed. Yep, late October, October 29th, the market bottomed. Then it trended up for an entire month until he said, you know, we're finally neutral. We're at neutral. And then it had a spike top, it flattened out, and then it continued to trend higher and higher and higher for years and years and years. It's the other direction now. You know, like it's not going higher today. It's going lower. And while it was going higher, I'll say, yeah, like there's a possibility. And you know, there's some trades setting up, and there's, you know, we're waiting for this thing to break 109 at that point forever and ever and ever on TLT. And then it just didn't happen. All okay. You know, there's nothing wrong with that, but that's how trading works. Trading isn't a thing where everything has to be a position all the time. Sometimes it's just neutral. Sometimes you're neutral and you're going, okay, well, I'd love to me, like right now it's a short, but I would, if it broke, you know, 109 on TLT, it'd be a long.
Yeah.
It's as simple as that.
Yeah.
And really, like in trading, if you look at, you just, if it depends on your time frame, right? Like if you're looking for a bounce off of support, great. There's your trade. You got a couple days. For me, as my time frame, if I buy this, I think it's gonna go right back onto its head at some point, and it's gonna stop me out. It doesn't really matter for me. But if I can get it to break out and get some momentum behind it, that's gonna be a good trade.
Yeah.
So it really depends, you know, what's your time frame? Are you just trying to ego trade and bang your chest and call bottom? Sounds fun. I mean, but really, like, trading's not supposed to be fun. Trading's supposed to be difficult. You got to make the hard decisions. Hard decisions most of the time is when everything's telling you it's going to go up and you got to short it. That's a hard decision.
Right. And some of those are the best trades. The hardest ones to put on oftentimes turn out to be the best trades, in my experience, my limited experience. But, you know, at the same time, and we were just talking about this off camera, is that, you know, if you get if you get a feeling, if you get a sense, intuition, that the market's going to move in the opposite direction, or the market's going to move in any particular way, you know, if conditions just, if they align and it sparks something deep inside, act on it, right? You got to act on it. You got to feed that just a little bit. What do you think?
I don't think so. And my reasons are, yes, if you have a feeling about the market, you can do many things with said feeling. However, if the market is improving you right or moving in the direction that you think it should be, then it doesn't matter. You know, like to me, it's like right now, I have everything in my gut is telling me that the bond market is close to a bottom here. But it's not really proven it yet. It's not really like, sure, it had a good week last week. Great. It had one good week out of many bad weeks, you know, like it's just not, that's not enough proof. If it like, you know,
Just
let's say something
like
else.
any market though. Let's not do the bond market right now. Let's talk. Here's a good example: natty gas earlier in the year, in the spring, right? Seasonally, not the best time of year to be buying natty gas. Natty gas had just fallen. I don't even remember. It fell off a cliff. One of the steepest declines in history,
Yes.
for natty gas. Risk is well defined. Risk is well defined. Take a swing. See if you get a bounce. You know, like that's one of those where it's like, I feel like we're gonna get a bounce here. But you know, there's a lot of evidence saying, hey, this probably isn't gonna work out.
So can you see
So what
that?
do you do? Take a swing.
Can you see the natty gas chart?
Yeah.
Yeah, so when we're looking at this and you're going, okay, well, there's a possibility here of natty gas. Let's look at the actual contracts because that looks like crap in comparison. Sometimes ETFs are shit. So if we look at the actual natty gas futures and we're going, oh man, like gotta buy this, it's cheap, gotta buy this, it's that. To me, it's just not proving anything, like where's the proof in it? And not to mention, like most of the time, especially in commodities, now stocks V bottom a lot, which is the reason why you can get into stocks and buy them on pullbacks at times and make money. Commodities don't usually. They usually have a very choppy consolidation bottom, which is the reason why 50-day highs, 100-day highs work better in commodities. And so if we're looking at it and going, okay, well, we made this, this 50-day high here. This is when my position was entered. What's the difference in trying to buy this or buying this? Well, if you bought this, you're gonna be in there and going, oh my god, I'm early, it's still crashing, and you're gonna put a stop right here and you're gonna get stopped. And then you're gonna put buy here and oh my god, it's still crashing, get stopped. Same thing, over and over again. Then you're gonna go, oh yes, I made it, and then it's gonna come back, you'll be like, damn, it gets stopped. So it's like, if you really just wait for like your right signals, then you're going, okay, well now I have a little bit more proof. Like it consolidated. It's making a 50-day high. It's very close to making a 100-day high. This high volume zone here is obviously what it needs to clear for everything. For me, it's a half position right now. If we got over this, it'd be a full position. So if we're looking at all that and going, okay, well, you got to buy because you have a feeling, you could feel a lot of things, like, but at the same time, like that doesn't make money. So once again, it's the same thing with the bonds, same thing with stocks, same thing with everything, is just understanding like what am I really doing by getting into a trade early? Am I getting into this trade early because I think it's cheap? Like cheap can always get cheaper. We know that as traders. And I think it's part of our human psychology, which is when you're thinking about something and you're going, okay, I really believe here that this is cheap. And I go to the store and I look for things that I like that are cheap. If like I find like I get a lot of like farmers market and organic fruit and shit, like, and if I find that on sale, I'm gonna buy the crap out of that stuff.
Yeah.
But at the same time in trading, the sale can always get cheaper. That's the difference in the real world. You're like, oh, that's not gonna last forever. In trading, it can last a long time and it can always get cheaper. Cheap can get cheaper. Look cheap here. Look cheap here. But now we're in the summer months. Now we're kind of going, okay, there's nothing really to do here. And then we're looking at Europe and going, oh, Europe's going to have, like for me, like in my weather cycle models, Europe's going to have a bad winter this year. Europe didn't had a very mild winter last year and natural gas was insane. What's it going to do this year? So now I'm looking at it and going, okay, now the fundamentals are telling me year end. Now the price action is telling me to start buying here. And then I'm going to have a full position here if it hits there. If I get stopped, like whatever, like I entered here, I got stopped, it actually would be here would be my sell signal, that red line. So it's like, what exactly happened? Like, who cares? And not to mention I could get an exit signal here. I think my stops here. My stops usually be under my exit. So my stop's probably about here. I'm not looking at my account right now. And then my exit signal's here. But once again, if it got stopped or hit my exit, and then my next entry's here, who cares? Like once again, it's these small losses that make sense. If this is a lot of losses, it looks cheap here, buy, looks cheap here. You just can't be disciplined buying things on the way down. You can be disciplined buying things on the way up. And I think that's the real secret to being a good commodities trader, because it's very hard I've heard people say this lately, and I don't understand where this phrase even comes from, because any commodities traders I've ever worked with have never said this to me. Maybe shorter term commodities trader, but not longer term. And I'm seeing a lot of commodities traders that are longer term tell me this. They're saying buying weakness is the best way to buy commodities. Now, you and I have talked about this before. I have that 4 days down strategy in the S&P 500. 2 weeks ago, it had a small trade that was a small loss, and then it had another trade that was a nice win, because there was 4 days down, and then another 4 days down the S&P 500. Most of the time, that trade works. I think it's like 75% of the time. It's a very high win rate system. Now, if we do that same thing in commodities, 4 days down is the start of a trend usually. So if you actually flip the system, it makes money.
Maybe, yeah.
It's like now in commodities, buying weakness is bad. And it's the same thing as like something like natural gas or bonds or whatever. Like most of the time, buying weakness is just a bad strategy in general, unless you're buying into you have some strategy that's buying into something. You're over the 200-day, you're buying pullbacks, you're having small trades.
Right.
That's only equities, not in anything else, just equities. You can do that. But on gut feel and commodities, if you have any sort of like feel in commodities, I feel like you're gonna get your ass handed to you, because they love to tell me I'm wrong. They love to tell, like, any of my thoughts I have on commodities, it's like, oh yeah, that's cool, Jason. You know how wrong you are about this? I'm gonna show you. Like, I think that's the reason why, like, I'm better as I get older at this situation of going, I'm not just going to jump in. I might have a feeling about it, but it doesn't mean anything to me. Just because it has shown me how wrong that is in commodities over the years. Yes, like equities, most of the time, like if you give a good solid pullback and you give it time and you see sentiment, and you can read all these charts and like you're understanding that it's at a pretty crazy zone, that might work. But what in commodities are going to tell? Is there a fear greed index for natural gas? Is there a put call ratio? Like you can build them like they do. You can make things like that. But once again, it's like really you have to go on what the chart's saying, what the fundamental and the supply and demand data is telling you. That's it in commodities, and that's also why when they trend, they really trend. When they're not trending, they're sitting there still. So you really have to, I think, to answer your question in a short sentence, yes, you absolutely have to be willing to think about your gut, but not do a fucking thing about it. That's the difference in being a good trader. I think like I could think that bonds could go up, but I will also at the same time have a short position on it. Very tough to do. Like
Right.
that's I think the last level of becoming a good trader that you really have.
So don't scratch that itch.
Don't scratch the itch, because the itch likes to tell you how wrong you are. I mean,
Oh
like
man.
just looking at something like simple, like TL or XLE or TLT or any of these things. Like if we look at something, here's my problem with buying things like that. You have something like XLE today. XLE, we're looking at a weekly chart of XLE, which is the energy sector. It's giving you, buy signals. It's breaking out of this very tight range. Where's the Bollinger Bandwidth? If we put the Bollinger Bandwidth on there, take off the channels, we're looking at this tight range. It's starting to break out of it. Why aren't we trading that? Why aren't we talking about that while we're talking about bonds? Like there's 5 billion trades setting up right now, and everybody in the world is talking about bonds.
Yeah, I mean, I think the world it's fixated on rates.
Yeah.
They haven't gotten enough talk about rates, which I can't believe it. I mean, I it's everywhere. So that's the thing. I love energy. And writing about bonds, I'm like, hey, you know what? If as an investor or a trader, you don't feel comfortable shorting bonds here, by all means, don't short bonds.
Yep.
There's all kinds of great trades setting up. There's a slew of areas where we can make money. Energy being one of my favorites. And what I like about this chart too is we're looking at continuation patterns in the energy space, right? Again, coming back to, preferring to catch the meat of the trend versus, the periphery, the ends, whatever, the edges of the move. So the bottom and the tops. Yeah. So I love it. I love the way energy is looking. We've got a lot of breakouts that, are holding up well. Interesting to see that failed breakout in crude oil. Got to say that was interesting.
But I don't think it's as bad as everybody's making it out to be. I'm
Are
just
you looking at the individual contract?
I'm looking at the ETFs just because I'm on
Oh,
TrendSpider.
okay.
Well, I think they have. I forgot they do have. I did get the futures on here now, so we're good. Even though they just didn't come up for some reason. Let's look at crude oil. Hopefully it works this time. No, of course not. Let's go to 2. Okay. So if we're looking at that, okay, so this is what I'm seeing when I see this. Now, most of the time, I think most people are going to look and go, okay, it's a daily contract. This is what I'm seeing.
Yeah.
I'm really looking at most of the time a weekly, and this is what I'm seeing. And I'm seeing that these weeks, even though they are having some sellout, which is normal. We had 1, 2, 3, 4, 5, 6, 7, 8 up weeks in a row, So if we have that many weeks up and we have this small pullback, that's fine. But at the same time, look at the wicks on these. That's I'm trying to pull back, but somebody's coming in and buying heavily,
Yeah, those long lower shadows.
Yes, nobody gives a shit, so somebody's coming in still willing to buy this heavily and stepping up to the plate. Hard to do, in that type of an environment. So especially like the environment that's today, everybody thinks bonds are done, yields are done. This is a situation where you obviously need to sell oil too. It's just not that way. And then if we go to this is what I like to do, for anybody who's watching, who's trading futures. I really like to go around the area and see what everything else is doing in the energy space, because guess what? I trade all of these. So all these are in my portfolio. And actually, the only one that isn't in the portfolio yet is oil, crude. Even though I still think crude is great, I'm going to wait for that breakout to happen. And that's just me. Heating oil gave a buy signal a long time before all this, and it has continued to be on a tear. This is not even given up. So this usually tells me, okay, what is oil really doing? Is oil going to be really weak here, or is oil going to kind of follow away? Most of the time when you have the products made by oil moving up, look, we came right back to major support and bounced right off of it.
Yep.
Boom. Heating oil can move, man. It is a wild product to trade. It is already back up at major levels. Nobody wants to talk about it. Heating oil is very similar to diesel too. This runs the planet. Then if we look at RB, which is gasoline, and so gasoline, very similar story, it's not as strong, but it's been choppy. I am long gasoline. It hasn't really gone anywhere major, but it is in a little bit of profit at the moment. And once again, came down, major wick back up. I think that all of these are going to end up moving up very soon. I think that this is a major consolidation. I see that we made kind of a head and shoulders bottom here, if you want to call it that. Either way, let's call it consolidation across this board. And then if we put something, let's go to put a little line on here and go boom. All right, so basically we're kind of looking at this zone of $3.01, let's say $3.02. Once we clear that, it's not going to stop. It's going to make a big move. And so I could see it having a little bit more trouble here, bouncing off of it one more time. But if heating oil is telling me a hint, and going back to energy, if energy is giving me a hint, Now we're making some sense of this market. Now we're going, okay, well, this market isn't just consolidating. This market is consolidating, tightened up, and is ready to move higher. I just think a lot of people are always going to be quick to write off energy. And this is why I think it can be in a major trend now. When you have, let's go further out here. When you have what happened in energy over the last, however many years, basically since 08 and on, came down, had a nice rally into 2014, kind of a double top thing. And then it came down again. And basically from 2014 to 2020, it was in a downtrend. And you watched all these analysts or traders try to buy energy, especially the ones that killed it in 2000 up until 2008. Around those times, yes, I can see that you guys see that the chart isn't just moved up since then. That's not my point. There was plenty of trades in the energy space that was outside of just XLE that made a lot of money. So there was energy traders ripping the face off of the market in those years from 2000 to 2008. And then they tried to do it after that. They made some more money, but they weren't really killing it. But then they lost money for years and years and years on end. And most of those people, they don't exist anymore, or they don't trade energy anymore. Whatever it is, they just kind of got out of it. This leads to the commodity cycle. The commodity cycle, and what we talked about in sugar, and the reason why I put that in my last letter on Substack was, if you're looking at the cycle, what creates lower prices? Well, higher prices. What happens when higher prices of oil happen? Well, then everybody's digging for oil. Think about gold rushes. Why is everybody digging for gold? Well, because the price is worth something, and it keeps going up and up and up, and more people will dig for gold. Same with oil, same with any of the commodities. So everybody at that point in 2008 is searching for oil. So once everybody's got it, then oil's getting pumped everywhere, and then oil's cheap. Now you have oversupply. Oversupply leads to lower prices. If we look at, let's go back to oil, because this will be easier to talk about like that. I think it was in CL2 actually. So now we're, dropping here, and then we're stuck in this, downtrend, because every time it moves down, people still have a lot of hope. They're going, oh, oil's going to continue up. And basically it made a high in 08 and never made another high. Actually still hasn't made a new high. So now, higher prices lead to lower prices. Then here, now we're at this point. Now what's going on there? Well, there's nobody looking for oil. Nobody gives a shit about oil. Oil is ridiculous. New companies are not growing. Companies are not expanding. Companies are not making money. Companies are blowing up left and right. They talk about the bankruptcies in retail right now. There's the bankruptcies in energy were going on big in 2018, 2019. They were huge. So at that point, oil's just worthless at that point. And most people get out. What happens there? Now there's an undersupply. There's more demand than supply. Now we have this running up, like crazy. It comes back down. What's the difference today than back then? Well, the regulations and the Agenda 2030 and Agenda 2040, and we're going to move to clean energy, and, nobody can dig for anything. So now that we're not doing any of that and nobody can dig for anything, now we have a situation where any of these pullbacks might be a little bit more shorter lived than we believe. And if the price of oil can be a little bit higher than we believe, because guess what? As much as we all want to think we're going to go magically off of oil, car tires are made of oil. Paint is made of oil. Most things in your house are made of oil. Acrylics are made of oil. Like our medicine is made of oil. Everything is made of oil. So as all these things are made of oil, and not to mention, I don't have a car that's running on, even if you have an electric car or a hybrid, it still runs on oil. Or if you're charging your house, if you're charging your car in your house, what's that running on? Magic energy? No, it's running on coal. So these dirty fuels that everybody hates, these companies can still make a lot of money because we haven't moved off of any of these. So, and not to mention, if we're looking at something as simple as Exxon, Exxon, what's the deal with Exxon? Well, they're also, as they're doing all this oil stuff, because oil is still essential for all of us, they are also getting into clean energy.
Yeah.
So all those big companies are also getting into clean energy as well. So they're your leaders in oil, they're your leaders in clean energy, they're your leaders in carbon taxes and all this crazy stuff. Like they're your leaders in all of these. So buying these energy stocks, and what is, let's go to Koyfin so we can figure out what's all in here.
I got a figure was thrown my way the other day of something like Exxon or one of the big oil and gas names. 25% of their business is focused on renewable energy.
Yes, exactly. And it's
Which I
becoming,
thought was really interesting. So whatever the transition is, these companies are going to be involved. So it's more of a play on energy than dirty energy.
yes, exactly. And that's the thing. Like you have to think about, what are these companies diversified into? Not to mention, what's their dividends? What's the, what are all these things? Like put all this together and you have a pretty interesting setup in the market for something to have an asymmetrical return for you. And look at the size of XLE. I like to buy the ETFs or more than just individual companies. Yes, in like my retirement account or a long-term accounts, we'll buy some individual stocks from time to time. But most of the time I like the ETFs. The reason why is at this point, like I'm basically buying Exxon and Chevron. And if COP ends up catching up, or if Marathon ends up catching up, then they'll start to take over. Like it's just to me, it's a ETFs are a play on trend following. When the strength is in something, they only move up in the leaderboard and become a bigger part of the ETF. So relative strength always takes over in the ETFs. I think that's why they usually outperform normal individual stock investors. So now we're looking at this. I think that somebody told me, I don't have Marathon in my portfolio. I don't watch it, but
Looking good.
yeah, people have been telling me it's been a big one. It's been really moving. So like, I mean, it made a new high in August. So we're looking at all these things. We're also, if we look at, just simple relative strength of these sectors over the last 3 months, like we're seeing energy, has caught all the way up. It was all the way in last place for a long time. Now it's caught all the way up. It's in the top four. If the NASDAQ didn't go up another, little bit yesterday, it would have been leading it. Which industrials and consumer discretionary above that. So, like it's a interesting market, an interesting time to buy things like energy, an interesting time to buy things like industrials. And I think, that's going to catch a lot of people off guard. And like you said, like you don't have to short bonds, like when you're looking at it, you don't have to just look at it. You can look at something as simple as, I'm just going to take the XLE and I'm seeing that it is moving to the upside. And let's get back to the weekly, and it's breaking out of a tight range. You can just be as simple as that. And I love this type of thing. Just, this isn't my time frame, but just kind of looking at it and going, oh yeah, like, it's coming back into this triangle, but it's wicking out of it every time. That's also a good tell that this could go higher.
Yeah, it's digesting.
Mm-hmm.
Demand is digesting supply. That's what I see in those candles. Absolutely.
Yes.
And what's great is that this tiny little patterns like this, short duration patterns, like this consolidation here could, it could launch the breakout of, above the shelf of former highs when we zoom out on the weekly chart.
Mm-hmm.
Because you look at XLE, I mean, it really hasn't even broken out yet.
No.
Like it's still stuck below, it's great financial crisis highs.
And what's good about that too is, if we look at 2021 through 2022, like it kept going up most of the year in 2022. That was a very tough year. So, and then it didn't really break down. It just continued to kind of
Right.
I mean, that's wild. Like if I put on a long-term channel on here. Where's my 20-week Donchians?
And that's really,
So
that's what I see when I look at the
made a
commodity
20-week
space
low?
right now. No matter where we look, whether we're talking about energy, whether we're talking about copper or even gold, they just haven't been breaking down,
Yes.
right? They've been consolidating, just constructive consolidations just below critical areas of overhead supply.
Mhm.
I mean, real rates ripped over the past year and a half.
Yes.
Gold's still hanging above its 2011 highs.
Yes.
Gold's what, like less than 10%, maybe 10% away from its all-time high.
Yes.
There's a lot of resilience in gold. There's a lot of resilience in the energy space, and even copper. Copper's hanging right around that $4 level. I think if copper gets back above $4, then things are going to get moving.
Oh yeah, I completely agree. And like seeing that it's still kind of hanging out over these highs, even, that's kind of wild to really think about. Like it's kind of still hanging out. Like this is the opposite of a good environment for gold. It's been a bad environment for gold for a long time, but it's kind of like when we looked at tech at the beginning of this year. This is how the big trades happen, in my opinion. You have a situation like this in gold. You have a situation like that in tech. If you're looking at the NASDAQ and going, okay, the NASDAQ has gone up in the face of rising rates. The gold has held up in the face of rising rates. What's going to happen with those flatten out? And like people are always like, bonds got to go up or down. They could stay sideways for a long time. So what if they just flatten out? That's an environment where gold's going to explode, and the Nasdaq could continue to explode. Like it's a simple. It's not a. It's kind of like what the Fed talked about at Jackson Hole. It's not that we have to continue to raise rates. It's that we just have to keep them restrictive. So now, if they're restrictive, and then some of these longer term bond yields start to come down because they're not going to push up the rest. Now we're looking at a situation that gold's easily at all-time highs again, and making new highs and continuing to make new highs. So I don't know. I think that this is a good opportunity for a lot of these commodities that have been sitting. Gold had a great run this year, even, like it started to move here and all the way up and really took a big run into resistance and then came back a bit and is consolidating. Like I think that's why it's so important to zoom out. Everybody, when you're looking at it here, you're going, oh my God, gold looks terrible. Look what happened. It's down every day. Like, and then you zoom out to weekly and you're like, oh, actually it's not that bad. It's kind of just sitting chopping around like most things do. And then if you look at a monthly, now we're really looking at it and going, well, that's how it goes. Now, if we look at perfect example of this, and this is cool because if you traded through this period, this was something that was very similar and very hard to handle. This point, I think this was from 07-ish till late 2009. Gold did the same thing where it didn't really come down and get hammered like the rest of the market. It just held out in a certain range. Then it broke out to the upside and made another big run. And that's a huge run. Like maybe it doesn't look that big to some people because like this looks so much bigger, but that's a big move. $900 in gold to 2,000. Like that's a big move. That's 100% move in gold within a couple years. So like it's something that we could see. There's even more consolidation here. And like you could say, oh yeah, well, that kind of happened here and it didn't move up. Yeah, sometimes, and honestly, it might not move up here either. That doesn't mean like I know anything for sure. But what I'm saying is if it breaks out to the upside, I'm going to want to be a buyer in that. I'm going to want to be involved in that, and I'm going to want to stay long that with a very small position and a very loose stop because you don't know where that's going to end up.
Absolutely. Well said, sir.
Thank you.
I like it. I like gold. I like gold. You know, it's gonna, you know, but like you said, it's gotta break out.
Mhm.
It's gotta break out.
It's got to make its move, and it really could make its move, and I really think so. Gotta move some stuff around. Coffee is important. But it's really got to make its move. And like you talked about copper earlier, and I'd like to talk about that too. You know, getting into copper, it's like, same thing. You zoom out, like yeah, all the commodities gave some back last year. Like that's a run. Like that's
Yeah.
called a run, like there's a lot of money to be made from there to there. And then it made a top, and then it came back down. But now it hasn't, like, these things aren't making new lows. Like that's something that I think people don't understand about commodities. Like when they're not making new lows, there's something building there. There's some reason for that. When it makes a low here, commercials come in and they start buying. And then the next low, not even as low, like most of the time the commercials will wait for support or an old price to hit, and then they'll start buying like crazy. Now they're buying up here. They continue to make these higher lows, put these higher lows in there. And they start to buy like crazy at these higher price points. I think we could see copper also being another one. Like it's sitting on support. It doesn't have much overhead resistance. Like copper could be another one that moves. Once again, it's something that has, like, most of the time it moves with the yields, but like people got to get out of that thinking like that everything has to move with this or that, or it has to be this way. Markets are so different than that. They're just trying to like confuse the most people, and the more people that see intermarket analysis and are looking at it, like myself, I look at it all the time. The more people that are looking at it like myself, the more the market goes, well, we can't do that anymore. People are catching on. Like as funny as that is, I mean, it's what happened to trend following. Trend following traders who were very short term, they could buy, Donchian bought 20-day highs and sold 20-day lows. He made a ton of money like that back in the 20s and 30s and 40s. Then you got to a point, like if you look at that system today, like it makes $0. Like you're just losing money. The turtle traders then had a little bit longer term system. They bought 50-day highs, they sold 25-day lows. That system makes no money today. Moved on to another system, 100-day highs, 50-day lows. That makes some money today. But the longest term systems, which is like what Jerry Parker and those guys use now, they're like 200-day highs now, 250-day highs, 52-week highs. Like, so if you're looking at it that way, now you're understanding that these things all change. Now let's look at intermarket analysis and how that's changed. Copper to gold ratio has said that yields were coming down for a year now. Like really, it has, and I'm guilty of posting it too, because even though I always put the disclaimer, intermarket analysis does not tell the future. It's just something we pay attention to. But intermarket analysis has failed in certain areas lately because the market is shifting. I think too many people are looking at it, and this happens a lot, and they're acting on these impulses. So we just have to be open to copper gives a buy signal, you buy copper. Gold gives a buy signal, you could buy gold. Even if you're buying them and owning them both at the same time, you're owning them both at the same time. They weren't bad investments at certain periods at the same time. So it doesn't mean that they both go up or down at the same exact time. So you just got to be open to it.
Yeah, from 04 to 07. Both absolutely ripped in tandem.
Yes. Great trades.
So, and what's interesting is that copper did not enjoy another leg higher after that rally, where gold went ahead and doubled.
Yes.
Into 2011.
And I think it's it's always important to understand the fundamentals behind the commodity. Copper being a growth type of commodity, global growth. It also says how much people are actually using the product to build new things and so on. Gold being basically a rock that people run to for safety and safe havens. Yes, there's other uses. There's going to be somebody on here who says, well, gold, yeah, I know gold can be used for other things. I'm not an idiot, but I also know that gold is not used for many things. And I know that its main use is to be traded and used physically and held for wealth, and mainly for fear. Like when markets are in fear, people run to things like gold. People run to dollars as well, but that's a whole other conversation.
Yeah, dollar looked like it, looked like it wants to go, started to break out.
Yeah, that's the next thing we should get into is the dollar. Yeah, because the dollar is, man, the dollar is everything, right? Like the dollar really is everything. Is there a DX1? I don't know how to do the dollar on here. We'll figure it out.
Pulling up a chart now. Yeah, it's interesting. You highlighted earlier that XLE did pretty well last year, while most of the market did not. If we have another period of strengthening dollar and rising rates, maybe again energy has an okay year, at least into the back half of the year, to the end of the year, maybe first quarter of next year, while just the overall market, the indexes tend to struggle.
There you go. Do trading view. I don't know what's going on with that, but it really doesn't want to pull up the dollar for me. I just started to use that for futures. I usually use my account. I'm not going to pull up my account for that on here, but I'm going to try to pull it up on trading view. Trading view is pretty simple.
Yeah.
So I'm going to trading view. Let's go to a monthly chart first. So we're going to trading view. We look at a monthly chart of the dollar. The dollar, whoa, that fake false breakdown was gnarly, man. That really caught me by, but that's what the market does, man. It does. It's going to catch you by surprise. The thing that surprised me even more is that the commodities are continuing to, kind of show resilience in the face of this rising dollar thing. I'm confused by it. But that, once again, like we're talking about earlier, that's what happens. You just never know how the market's going to react.
It's really been that way since May of 2021.
Yes.
They both kind of rolled over together and have been chopping sideways, and now dollar's breaking out, and it looks like the CRB index is starting to catch higher too.
Yes, and
so interesting.
When we look at that, we see like the end of 2021, the dollar starts to catch bid, but also commodities really bid, but they stopped around this zone. And then the dollar kept running more, put a lot of pressure on the market. And then as it came down, the market started to move up with that, which is very important, because this is really like, the market took a big hit in the last 4 weeks, and that really had to do with the dollar. So if we see the dollar kind of turning down here, I think that would be a great sign for what's going on next. These levels are all important right now. We had that big reversal, and I was like, oh, big red to or green to red day. That's possibly a good reversal in it, but we got to see how we close the week, and then the week closed up. So I'm not going to be one to bet that the dollar's going to just come straight down next week or the week after or so on. I want to see it clear this. When you start to get over all this consolidation, that's going to tell us a different story. I think that would be very recessionary. I think the worst environment for the market is when the dollar and commodities are going up. It's too much pressure for the market in every single way. Commodities putting pressure on normal people, putting pressure on the economy, putting pressure on everything. And then you got the dollar rising with inflation rising. It's very tough for the global economy as well. If we're talking about trade and so on, like it's just too much. So I'd like to see this turn over to get more bullish on the market again, to see something different. But I'm still not bullish on the dollar yet. I'm just seeing like it is. I gave a false breakdown. It is rallying. I have nothing wrong with, people, I have some subscribers that, I talked about, if it gave a false breakdown signal, would be a good short-term trade to the upside. I have some subs who took that trade. They did very well. I have nothing wrong with being long the dollar right now. It's a cool trade. But for my time frame, it doesn't make sense just yet. but it might be, as soon as it starts to really break out to the upside, really start to hold these zones, I'd be more bullish on it. For now, I'm just looking at it and going, it's the dollar doing dollar things.
Yeah.
At the moment, it's just the dollar doing dollar things. And then if we look at, Bitcoin has obviously had a lot of trouble too with this same scenario. The dollar looked good. I was just talking about the pullbacks in Bitcoin the other day. That's the only reason why that's up. But that's to show that if you have like a Bitcoin stop and you like want to be in these major trends in Bitcoin, like your stop's gonna have to be really, really wide because that's just a normal 24% pullback in Bitcoin. That's just, and really that's the truth. That's how it happens. But we're stuck in this zone. It's neutral for me now. I would be interested in getting long or short it. If it started to break down, it would start to give short signals. If it moved back to the upside, it would start to give long signals again. It's just nothing to do here. I know people are going to be like, oh my God, it's 26,000. You could buy it 26 and sell it at 31. And I just don't do that. I'm not good at that. That's not my forte. So sorry that's me. But if that's you, go for it. Have at it.
Whatever time, frame works. Everyone's different, and that's part of, the process of learning, what system, what approach, what time frame fits your personality. Like
Yes.
what can one actually execute? And that's really what it's all about, is like whether or not you can execute your plan. You can have the best plan in the world, but if you can't execute it, it's not your plan. Right?
I had a great conversation. Well, not a conversation, it was a comment. I had a great comment from in one of my last videos. It was on the Shapiro video, and it was a commenter who said, okay, let's say like you want to buy news failure events, and let's say like you don't watch the news, then your strategy is shit. And I was like, well, like that's his strategy. Like it's not yours. Like if you don't like watching I said not to mention, like, he's not saying he's watching the news. He's talking about like a CPI report comes out and the market reverses goes up on a bad CPI or something, like that's what he's talking about. But also, like, let's say it is just the news. Let's say it's the normal news and you don't like watching the news. Then don't do that. I don't watch the news. I never have Bloomberg up or MSNBC. Like some people are like, oh, you got to watch it without the sound on. I've never done that. I hate the news. I don't like to watch it. So what do? Well, I look at the charts. Like you could have the same exact strategy, like as like someone like me or Jay. Like my strategy is basically like Jason's without the news failure stuff. Like if I'm looking at something like a COT report and I'm going, okay, there's a buy signal. Kind of like bonds right now. There's a buy signal, but I'm not just going to buy that because it's kind of looking like commercial buying has gotten to a level. It's giving me a buy reading on my index algorithm. And so if I'm looking at that and going, okay, it could be a buy, that doesn't mean anything. But if it starts to break out to the upside, that starts to mean something.
Yeah.
That's without reading the news. So like, how do you fit this to yourself is all important. You got to fit it to yourself.
Yeah, 100%. I don't know, man. I'm looking through these currency charts and I see a lot of dollar strength beneath the surface. See, big potential failed breakout in the dollar Swiss franc, or the Swiss franc, I should say, futures. Aussie's breaking down, Kiwi's breaking down.
But look at it from a far out view like this. Like this is USD CHF, the Swiss franc. Like it's US dollar was strong going all the way against it, going from 2020 all the way till 2022. And then basically that was around the October time. It broke down, it retraced back, broke down, it retraced back, broke down, it retraced back. You know, most of the time, like it's the same thing as your bond trade. Is it in a downtrend or an uptrend? Well, if we look at it far out, it's still a downtrend. You know, it's obviously still a downtrend. So I'm just kind of watching it. You know, what other currencies are you looking at right now?
Well, I'm talking about like zoom out. If you can pull up the Swiss franc futures and you zoom out like, I don't know, a decade. Zoom out to 2012.
Let's see.
And it took out this 114.50 level.
I think it's 6S. They keep changing. Yeah, there we go. They keep changing these around on all the brokers. Now it's like CHF is the Swiss franc futures, which doesn't
Really?
make sense. Yeah, on some of the brokers. Okay. There we go. Zoom out to what?
To 2012.
Okay, here's 2012.
It's kind of hard to see on a monthly. On the weekly, we get a breakout and it kind of falls back below the pivot high from January 21, and then those pivot highs from April 2014. It got up there. It looked like it was gonna go, and then
Yeah, I mean it's sitting on resistance, right? You know, like it's but once again, like if we're looking at something like gold and we're saying, hey, gold could break out higher here, we have to also say the same thing about this, you know,
oh
like
no, absolutely, and that's the thing. I got it broke out to 117 and 117.50. I mean, it started to rip higher last month. Oh, it's not showing on your chart, and then it's falling back. So
I don't know what's up with that.
I don't know.
Actually, I got
I
that.
see a big failed breakout like that, and then I see the Canadian dollar, US dollar CAD failing to hold its breakdown. Maybe get it, it starts to run back and retest that 139 level. I look at the Aussie breaking down. I look at the Kiwi breaking down. I look at the pound still stuck below a decade-long downtrend line, running in and finding resistance at that 130, 150 level. I see that, and I see the euro back below 108. I'm like, hey, maybe the dollar starts to really run here. And then you look, start looking at emerging market currencies. They're not looking that great. Dollar is really starting to make
One
moves
though.
against a lot of Asian currencies.
Here's one though.
So
here's a
yeah, and then there's the peso. And the peso is, if you've been trading the peso, you've been killing it.
I have
You've
no
been killing
idea how like this trade was like it's funny because like of course like how it works in trading is like currencies like I could post currencies every day in my currency trades nobody's ever going to care but really
it.
it's the forex trading man like the amount of leverage you can get in forex and futures using currencies is insane.
Yeah.
You can make a lot of money doing it if you know it works. It's because like this is let's do the math on it. If we just look at the breakout all the way up, it's only 15%. In like normal people's minds, that's nothing. They're like, oh my god, 15%, who cares? In futures or forex, we're talking about a massive return in that.
Yeah, and that's the thing. Like, I don't think in terms of percentages.
Yes,
I
you
think in
have to
terms of
start thinking of the amount of
pips.
leverage.
Yeah, I think in terms of pips. I think in terms of ticks,
Mhm.
because it's all about how many contracts, how
It
much you're swinging. Because a $10 move in crude oil is a $10 move in crude oil, whether we're going from 110 to 120 or you're going from -30 to -20. It's the same. It's the same value, right?
Yes. So a major pullback in something like that's trending like the peso is, a major pullback is 6% here. So if we're looking at it, I think my models on the peso, I think my stops are at like 8 or 9%. So that's really a tight stop. So that means my position can be a lot bigger. You know, if I have like, if you have $1 million account and you're looking at only losing 1%, like now we're talking about like we can have a major position in that. So now we have a big position in something that's going to move and it's in a great trend. It's been a great trade, you know, like one of the best ones. But also, like when I'm thinking about something as simple as the peso, and I'm thinking about all these different currencies, like I don't really like, I'm not much of a European currency trader. I really don't like Europe much in the long term. I trade them because they're in my models and my systems. I do have the pound on as a long, even still. The Swiss franc is a long still. But I don't like Europe in the long run. Like I had somebody reach out to me in in my Substack and said like, yeah, like I see the pound trade, but I like it, and it worked. Like it was a while ago, whenever it was working out well. And he was like, yeah, like I see it, and you know, I see that it worked out. I think we had, maybe it was a false breakdown signal. I can't remember, but it's something, you know, in this zone. But I see it working, but at the same time, I live in Europe. I can't buy anything. And I was like, I get it. Like I personally like, even though like I, you know, you can't think like that as a trader, like I get it. It's Europe is kind of a shit show. And so for me, like any long-term currency trades in Europe is hard to do. But at the same time, like I'm a long-term trader. And if I zoom out, I'm seeing, hey, this is, you know, in an uptrend, it's ugly. It's bull. It ain't pretty like the peso. I wish everything looked like that. It just doesn't, you know, like it,
Yeah.
you're gonna have these pullbacks in your trades and they're gonna look bad at times. But I do think that it is very possible that we have this type of a run. You know, we had all these things sold off really hard into 2022. We're possibly coming out of a bear market, you know, like it looks like we're coming out of a bear market. So if we're coming out of a bear market, there's no reason that these type of currencies couldn't follow. They're not ugly to a point where you'd say like you know, they don't look like bonds where you're like, I got to be bearish. So like bonds, you got to be bearish, but this, like, you know, when it consolidated like bonds did, it started to move to the upside. Bonds started moving to the downside. So this is, you know, kind of a scenario where you're like, okay, well, maybe these could work. Maybe these could hold up. You know, even the euro. I mean, they're all making higher highs and higher lows. And whatever you want to say about them, that's the one thing we always have to keep in mind.
Yeah, absolutely. Yeah, those trends are still intact. I mean, for the euro,
They're ugly, but they're
they're
intact.
ugly. For the euro, those pivot lows from earlier in the year, I
The
think are.
the
Oh yeah, and the yen. And the thing is, yeah, and that's the thing. Like dollar yen back up to 152.
Mhm.
You know, we're going back down to 66 here. In the futures, it looks like it.
Yeah, I mean, like it's I could see it, you know, maybe a double top or something, who knows, but like that's something like you just don't need to speculate on. You can sit and wait and go, okay, well, when this actually starts to get to that point and it reverses, great. I don't need to do anything.
Yeah.
I don't want to
Right.
run in front of a freight train. Like it doesn't sound fun. So you're short the yen, your model short the yen, great. Call it a day. It would sound really fun. I think that's the type of trades that people would like to hear more. They would like to hear me say things, and just traders in general. They'd like to hear them say, "Oh, well, you know, I see that the yen has come down so much. I'm going to buy it here." And when it makes two ticks, you know, people are like, "Oh my God, you killed it," you know, like because you called the bottom or something. Really, it's like the things that are already moving and trending are probably going to move a lot more than the yen. Like the peso, even like think about it this way. Over the last like 6 months, probably people with the peso have probably looked at it a million times and said, you know what, I should have bought it back then, but I'm not going to touch it today. And they probably said that here, and they probably said that here, and they probably said it here and here and here. And it's continued this whole time, you know. And that's most of the time because strength begets strength. If you have something that's strong, it usually continues longer than you can dream of. So I would just continue to be open to the fact of, you know, these stronger currencies being better plays to be in Like if you like for me, I'm seeing the peso's obviously the strongest. The Swiss franc is strong too, even though it pulled back a bit. These are the places you want to be over going to the yen and being like, I'm getting a sale, like getting a great sale. Like there's no sales in trading.
Yeah, and I mean the gosh, that dollar yen has just been such a great trade over the past couple years. And it's a carry trade.
Yeah.
If you're in the actual, if you're in the spot market. So that's been a great trade. This, man, maybe the peso consolidates here for a little bit and we get a continuation pattern and it keeps ripping in the same direction. It was wild to see the vast majority of major global currencies really get hit by the dollar last year, while the peso trended higher. That's what that was just, I found that so amazing. So yeah, if and when it's time to play a weaker dollar, peso is probably one of my favorite plays.
And I don't, I personally don't, understand the exact why there. Like like people who could try to explain the interest rates and so on. Yeah, I understand what the interest rates are, but like there's not a clear answer to why, you know. But I do know that it consolidated, it broke out to the upside. I got long. Like that's it's as simple as that. And
Yeah.
also, what's good too, if you take it to another level, which is okay, the peso looks good. Well, what about the index? What about the ETF for it? What about the futures for it? Like now you have other things to trade in it, and those have all done very well too. I think EWWs in our not think, but I know EWWs in our long-term accounts. That's done very well too. That's an ugly ass triangle. Sorry, guys. But we basically have this scenario. We got the squeeze pattern. It broke out of a squeeze. That's one of my favorites. And then it broke out to the upside and continued. Like it did the same thing that the peso did. It's a little bit choppier because it's equities, but it came up, it made a new high, it came back down, double bottomed, and then reversed higher. So like just putting it together, if you have one thing that's doing well, like a currency, and also I think it's really important if you're buying international ETFs, just to understand the underlying currency of each of these ETFs, you're going to make a lot more money than the person who's just looking at the ETF alone. Like you got to look at the currency and then the ETF and make sure they're both in line. Things like India, things like Turkey, which Turkey has been a trade for me. I don't know if I don't know if I've ever I've talked about it to my buddy Kashap a bunch over the years, but I don't know if I've talked about it like a lot to people or ever talked about it on here. But I have tried to trade Turkey, I don't know, 100 times. No, it hasn't been 100. It's probably like 10 times, but it feels like 100 times. And every single time it's like I have all these like conviction and I'm like, I've figured it out. This is my long-term position, my long-term portfolio, very small position. And Turkey's like, and I'm like, okay, this is going to work. The currency, the everything, the fundamentals, the technicals, the blah, blah. I could go on forever. And then it's like, boop, done. And that's like, this was the last one before this current trade, which was it went up and then it came all the way back to my entry point. like it stopped. Yep, it went up for like I want to say like 6 months, and then it came all the way back to my entry point, and when all the profits went away immediately, and and it was like that. The thing is, it didn't kill me because most of the time it did go up on these signals, but it would come right back down to stop me out. This last one, however, this has been the ugliest, choppiest trend, but it's actually moved up, this whole time. And it's been a big move, like that's a 114% move, and then if we just look at this recent one, this is a 35% move in just a couple months. I mean, it's been it's been a whole different world lately where it's like, okay, so the last couple trades have worked out really well. We'll see. But once again, what I'm getting at this about is that it is really tough to trade these international ETFs with shitty currencies. It's really tough. So, if you're insane and a glutton for punishment like me, sure, keep trying to trade it. Like the plus is one trade has made back all the losing trades easily and then some. But at the same time, it's know that you're going to drive yourself nuts.
Yeah, I don't trade this ETF.
Nobody does.
But yeah, but I mean, wow, 114% gain off
Yeah.
of the July 22 lows.
Yeah.
It's not bad.
No, and it's outperformed most of the world right now, and it's showing relative strength. It's pretty wild, Vietnam is another one. Like a couple years ago, we had a good trade in Vietnam. You got a sell signal around this zone, and now it's like back into a new buy signal recently. So I mean, like, there's a lot of these international ETFs that you can buy. Like, obviously, we just talked about Mexico. Canada was a good trade. Now it's just kind of chopping. Japan's been pretty good. It's sitting on support now, but that was a good trade. I mainly watch Japan because if I can see what Japan's doing most of the time, the US does something kind of similar. So that's why I watch that. So some of these international ETFs are good. EWG Germany. So there's a bunch of them in here that could be buys. Poland has been a good one. So I mean, there's a lot of them that is like, you could trade it. Once again, here's Brazil, another one that's like, as tough to trade as you can possibly get in the world.
Yeah. Seriously. I see a lot of overhead supply still.
Yes.
Still a lot of work that needs to be done.
Yes. And it needs to start to get to a zone where it could actually start to break out of it and do a lot better. Like once like, everybody keeps talking about emerging markets, and like emerging markets, they don't look bad, but they need to really break out of this resistance zone, and then it could possibly run. Same thing with IWM, like it doesn't look bad, but we need to get out of this zone.
Yes.
All these things are out of this zone. The S&P, like, pull back, like it's just a normal pullback in a trend. Like, we need to get out of this zone.
Yeah, it's a healthy pullback.
Yeah.
I mean, after the run it's been on, I mean, to expect it to keep ripping higher is just unreasonable.
Yeah. Uranium's another one, like it's something we talked about on Substack the other day when I had the entry like last week. And it was just a great buy signal. It's been like these type of areas that are not heavily focused on, that are commodity based. Like, you can really find some great trends in these. You can really start to understand that, like, just buying the S&P 500, yeah, it's cool, but if you can rotate around and find relative strength in different areas, now you're doing really well. Like, look at the last month in the market. It's been tough. What's uranium done? Well, it's just gone up the whole time. Like it's shrugging it off because it's not as affected by the market. The weight of the market isn't always on it. It's the same as if you looked at, I might be wrong about this, but if I remember correctly, if you look at uranium back in 2008, the uranium, I'll go back to the individual stocks. That ETF goes back for enough. Yeah, if you look at like 2000, we're in a recession, the S&P is going down at that point, uranium's doing whatever it wants to do at that point. It's not really getting killed. Into 2008, like it's still moving up into 2008. Obviously, it caught a sell-off too, and then when it moved up, Fukushima happened, and then that was the end of that for a long time. But it started to move up again as we realized, like, it is the only thing that's viable as an energy at the moment. So, like, we have a lot of reasons like uranium, all the analysis is on the Substack for anybody who wants to check it out. But like, what I'm mainly getting at here isn't to buy uranium or not buy uranium. I don't think everybody should do what other traders tell them to do. It's kind of like when you're playing a game of basketball, uh, people on defense are always fucking with you. They're always saying, "Hey, shoot the ball." Like if you can't shoot, they're like, "Shoot." If you can't drive or dribble, they're like, "Dribble." Like everybody's going to tell you that on defense. And really, like when you're looking at traders and analysis, like people are like, "Do this, do that." I don't know your personality type. I don't know what you should do, but I can tell you what I do, and I can tell you what would be good to think about and do. Good things to think about are what doesn't have a major correlation to the S&P 500. So add something like uranium or uranium ETFs into your portfolio as something you, not in your portfolio as in just buy, but like something you watch. Now you got some diversification in your portfolio that can actually make you some money.
Absolutely. Absolutely. I look, looking at all of these areas, like uranium, like coal, rare earth metals, lithium, looking at all of these areas for potential for buy opportunities. I mean, coal's looking great too.
Yeah.
Here we're looking at Tech Resources, and I think it's really interesting because Glencore has been making a bid for Tech's, I guess, metallurgical coal section of the company.
Mm.
And I just think it's interesting that we're seeing some of these potential mergers and acquisitions and major moves trying to be made between the big commodity houses, because we saw a lot of that in the early innings of the previous commodity super cycle. So they have inside information, and they understand what's coming, could potentially come down the pipe, and they're making moves. I think that's really interesting. I think if you look at CCJ and we zoom out and look at gold and we look at copper, they all look so similar.
Yeah.
They all did really, really well during that last commodity super cycle, and they're all kind of just chopped sideways over the past decade. So yeah, I think these are the areas that we need to pay attention to for the next decade.
Yes. I completely agree with that. Like I completely agree. I also think that, something like, that this had the what's it called? Copper had a range for so long here,
Yeah.
and then it breaks out of that range and makes a new range. I still think we haven't seen the part of the commodity cycle where copper makes a new range.
Yeah, right. A lot of commodities, right?
Yeah, a lot, or gold makes a new range. I think that's
Yeah.
the last part of this cycle where we start to see this new range. And that's really going to be a fuck all to humanity, really. Like, sorry to put it in that term, but it's like that's humanity getting like fucked, like, and that's going to be a whole. Because what I think is, as much as they say like we're never going to raise our inflation target and all this stuff. I know the Fed loves inflation because they're an inflate or die organization. They cannot live without inflation. They want to say like all this stuff about how they hate inflation and their whole goal is to manage it at 2%. Why not manage it at zero then? Why isn't your mandate to have none? It'd be great for everybody. We'd love to have zero inflation, but really, like then, like who's gonna inflate my real estate? Who's gonna make this price go up? Like then nobody's doing it. So that's how they exist. They exist for those reasons. I think as much as they want to say, like, I think they'll start to really we'll see more cooking of the numbers. We'll see the numbers all of a sudden start to change, and it'll be like when you go in the real world, like everybody knows inflation has existed for 20, 30 years. I've seen it going up in my groceries or whatever over 20, 30 years easily.
Mm-hmm.
But if we go to like the Fed, it's like it's been at 2% all these years. Like really, it's give me a break. Like it's been about 10% a year. Is probably the truth, more closer to the truth. So when we're looking at this, we just kind of have to understand like we're probably at some point going to see something major. They want to say it's under control, like, and it's like, if it's to them, like, let's say the way the numbers are cooked, and we'll end on this. If we're looking at oil and we see, okay, oil's at $80 and it stays there. Now inflation has actually been cured. Oil has stayed in the same spot. Inflation is cured in the Fed's mind. And in normal people, they'd say inflation is cured, and traders would say inflation is cured. Like, that's the truth of this subject, is like, it's not about bringing it back down. It's about keeping it sustainable. And the higher you can make it and sustain it, the better off they are, while telling the world that they've done their job.
It gives them more room to play.
Yeah. And they get
more room to play. Yeah.
Yep. And today, now with rates higher and everything, now they have a lot more to keep the game going. And they need that. They don't need to today. If COVID happened, they don't need to put it to zero. They had to put it at zero because we were at 2% then, or even under that. Now they could put it to 3% and it'd be a major rate cut. So it's gonna be interesting to watch this going forward. And I think if the inflationary cycle doesn't come very soon, I think what brings it on is we'll see another event happen. And that event will happen, and then they'll cut rates again, and then inflation will be out of fucking control. Like, there will be no, like, stopping it at that point. It will be absolutely out of control. I hope that doesn't happen, but we just have to pay attention to the markets and also history of markets, and that's what happens. That's what the Fed's always behind the curve. It's not me making this up. That's just what they do. Look at 2020. Inflation's transitory. It's going away. 2021, inflation was still transitory. It's going away. And then you're like, like, copper is doing this. Oil is, if we look at crude again, crude is just trending straight up, from negative whatever it was straight up to, 130, I think, was the top. So it's like, yeah, like, there's a road here higher, either way we look at it. If you could just put money into commodities and walk away for 20 years, that would be a possible thing. But really, like, it's, as traders, we have to be open, we have to be nimble, we have to make sense of it, and then we have to kind of put money to work as these opportunities come. For me, right now it looks like it's picking back up, but I'm also open to the fact of something happening that's going to send everything down a little bit for a minute. And then if the Fed starts to react, that's going to change everything.
Yeah, absolutely. So what? $25 beans, $20 wheat, $100 silver. I mean, when we start, when the markets begin to find a new range. I mean, I'm just throwing numbers out. I'm just having fun. I
mean, I could see this all, like, new ranges across the board, like, just at this point, it just hasn't happened yet. It really hasn't happened yet to any degree like you'd usually would see. Like, even something like soybeans, like, you see that started to bottom out around these old highs, like, it's gonna do that again at some point. Prices don't stay the same forever, no matter how much they want them to. So at some point, things are gonna have to catch up, and not to mention, like, grocery stores, they gotta raise prices or they're gonna start to have trouble. And then, farmers, they gotta raise prices or they're gonna have trouble. Like, all these things, like, they're all getting hit badly because the crops are bad this year. They're having trouble with a lot of things, not to mention all the weather cycle. Like, we didn't have much rain this year. A lot of things got screwed up because of it. We had blight on some of our corn. Like, all these things are continuing, and even though it hasn't really shown up in the price yet, those fundamental factors are there. And then if we get buy signals in these, now we're talking about a real major run in the commodity space.
I like it. All
right, we'll end right there. Thanks, Ian, for coming on, dude. It was great to have you.
Yeah, man, my pleasure. Thanks for having me on again.
Of course. Let me figure out how to get this back. Top share. And then